Good evening. This is your Northeast Asia Market Close briefing from AJP. One day after Black Monday, Northeast Asia's markets all finish in positive territory. But beneath the green close, Seoul's rebound remained hostage to two semiconductor stocks. Shanghai leaned on oil and defensive names, and Tokyo once again showed how a handful of heavyweight shares can steer an entire index. Tuesday brought relief across Northeast Asia, but not reassurance. South Korea's KOSPI rose 0.73%. China's Shanghai Composite gained 0.78%. And Japan's Nikkei 225 added 0.7%. The rebound came as investors stabilized after Monday's global semiconductor sell-off, while stronger than expected Chinese trade data helped improve regional sentiment. Rising oil prices also continue supporting energy shares after renewed concerns over Middle East supply routes. But each market recovered differently. Korea remained dominated by swings in Samsung Electronics and SK hynix. China found support in oil producers and consumer heavyweights. Japan's gains relied largely on AI-related technology shares, while several other index heavyweights continued to struggle. The common theme was simple. The panic faded, but concentration risk did not. The KOSPI closed at 6,856.83, up 49.9 points, or 0.73%. The closing gain barely reflected another extraordinary trading session. The benchmark climbed as high as 6,979.92 before tumbling to 6,448.86, a swing of more than 530 points within a single day. Samsung Electronics rose 3.34% to 263,001, while SK hynix gained 3.69% to 1,913,001, helping pull the benchmark back into positive territory. But the broader market remained weak. Only 212 stocks advanced, while 682 declined, showing that most shares failed to participate in the recovery. Hyundai Motor dropped 4.39%, reflecting continued pressure on cyclicals. Goldman Sachs said Monday's collapse was worsened by forced deleveraging in newly launched single-stock leveraged ETFs tied to Samsung Electronics and SK hynix. As the products lost value, fund managers were forced to sell more of the underlying shares to maintain leverage targets, creating a self-reinforcing cycle of selling. The bank now identifies 6,800 as the KOSPI's first major technical support level. One day after the worst sell-off of the year, Seoul recovered the level but not investor confidence. Shanghai's composite closed at 3,944.46, up 30.66 points, or 0.78%, recovering part of Monday's losses, but remaining below the 4,000 mark. China's rebound reflected a different market story from Seoul's. PetroChina climbed 3% to 9.95 yuan, extending gains as higher crude prices continued to benefit energy producers. Consumer heavyweight Kweichow Mutai rose 0.28% to 1,214.41 yuan, adding support to the index. While China Merchants Bank slipped 0.27% to 37.15 yuan, limiting gains from the financial sector. Unlike Korea, China's recovery was driven less by semiconductor stocks than by domestic defensives and commodity-related shares, with stronger than expected trade data also helping improve sentiment. The Nikkei 225 closed at 67,716.00, up 473.27 points, or 0.7%. But Japan's rebound also depended on a familiar group of heavyweight stocks. Chip testing equipment maker Advantest jumped 2.65% to 29,585 yen, providing one of the biggest positive contributions to the benchmark. That strength offset weakness elsewhere. Tokyo Electron slipped 0.36% to 71,040 yen, while fast retailing, the Uniqlo operator and the Nikkei's largest weighted constituent, fell 1.91% to 79,680 yen. Like Seoul, Tokyo's headline index looks stronger than many of its underlying components. A handful of expensive stocks once again determined the direction of the broader market. Tuesday showed that Northeast Asia's rebound was driven less by broad conviction than by a small number of heavyweight stocks. Seoul climbed because Samsung Electronics and SK hynix recovered. Shanghai advanced behind energy and consumer leaders. Tokyo relied on Advantest even as other index giants slipped. Monday proved how quickly concentration can magnify losses. Tuesday showed it can magnify recoveries just as easily. The real question is whether the next move comes from improving fundamentals or simply from whichever heavyweight stock moves first. We'll be back tomorrow at the close to see whether today's rebound marks the beginning of a recovery or simply another pause in one of the year's most volatile markets. If this briefing keeps you ahead of Northeast Asia's markets, subscribe and turn on notifications. Thank you for watching AJP.